Let's go inside out. And for that, we welcome in Ray Wang, principal analyst and founder, Constellation Research, Inc. Thank you. And also Tom White will join us in a moment with some trading ideas. Ray, good morning to you. Thank you for being with us. I know you're taking a close look here at the JD.com earnings. I see the stock is up about 3.8%, up about 100% in the last 1 year. What did you think of the numbers that you saw this morning?
You know, these are great numbers for JD. What it shows is a couple of things is that the China recovery is happening. It's happening at a pace that people weren't expecting, and that JD.com is one of the post-pandemic winners for China. So it's good to see the monthly active users and the millions that actually they've added. I think that was actually an important number that I was looking for, really to see that they've gone to 417 million in terms of customer accounts where they're growing. And that 29.9% growth is what people are looking for, high double-digit growth that actually takes JD.com in a head-on with Alibaba.
I almost wonder how JD.com did so well. I know they're not the same concept, but Baidu missing on all that digital ad revenue and the concerns that we saw with Baidu. And JD.com comes out with something totally different, with a beat on the top and bottom lines. Why do you think that is?
Well, they're very different companies. And when you look at China's digital giants, you have to understand that when you're monetizing, you can monetize on ads, you can monetize on subscriptions, commerce, digital goods and services, or if you're thinking about memberships and subscriptions. And JD.com is focused on digital goods and services. They're the backbone network that everybody jumps into to compete with Alibaba. If you need to get something from point A to B to someone's home, JD.com is what people are using to do that. And they've been doubling down on their transport network, their investments that are going on in terms of automation and AI, whereas Baidu's actually got a wide portfolio, right? Think of them as more of a wider property, you know, thinking of more like a Google versus an Amazon.
Mm-hmm. What do you think of, so many people like to invest in the Chinese-based stocks. They think it's an exciting prospect with some great growth potential. What are your thoughts? Because, I mean, even today, we've heard a lot of tough language, everything from Huawei to even Baba, which I know we're going to be previewing the earnings, but the broad-based idea of investing in these kinds of companies.
Well, first of all, you got to have some appetite for risk because you can't always trust all the numbers. You can directionally be in the right place, but there's a lot of growth potential, especially in China on e-commerce. They've been the quickest to adapt to e-commerce. They've been the quickest to adapt to digital payments, and a lot of the digital goods and services are there. These are one of the winners. Just like the way we look at FANG, you got to think about JD, Alibaba, Tencent, Baidu. They're in that same category of high growth digital giants. So if you want to bet on China's growth and on the retail sector and on where digital giants are going, if you like buying into Amazon, if you like buying into Facebook, JD.com's interesting, right? It's only 1.25, multiple to sales, and that's actually pretty interesting. And they're probably one of the more undervalued Chinese internet stocks or Chinese digital giants. And so that makes them kind of attractive for people actually looking to see and follow that growth. The other one that's interesting is really Alibaba. When those numbers do come out, Alibaba's got some very interesting growth numbers that are similar to the JD.com pattern, but very different in the sense that they've been focusing, much more on the consumer end of that commerce piece as opposed to the supply chain logistics piece, which is what JD.com has done a really wonderful job of.
Well, let's expand on the Alibaba earnings preview that we're doing right here, right now. When you talk about the concept of what Alibaba is doing, people expect a lot of growth, right?
They do. And Alibaba is more set up like Amazon in terms of being able to monetize in terms of anywhere from commerce and movies and, being able to do AI and the cloud, right? And so I think Alibaba's followed more of the Amazon model as opposed to what JD.com is doing the back end side, which is a little bit different. And so Alibaba is a better reflection of what the consumer sentiment of China is, as well as any kind of digital retail, digital commerce, movies, streaming, and of course the cloud computing aspects.
So when we look at Alibaba and its potential going forward, we say it's like an Amazon, right? How much, when we talk about the global growth story, how much volatility do you expect?
Well, we're about to see one of the biggest trade wars, cold wars, cyber wars, commerce wars that we've ever seen among digital giants. A lot of countries are actually circling the fences in terms of how commerce is being conducted across, their borders. You can see what's happening in India as they're starting to ban outside internet companies and digital companies. The EU's had that sentiment for some time. And so this notion of large digital giants jumping into each other's countries and competing, that's going to start changing as well in terms of the landscape. So the US-China war was just one part of that. It's part of a global trend where the nationalism aspects of large digital giants playing a role, jumping into different countries, and then, quote unquote, invading their countries through the internet. I think that's going to be a theme that we're going to see over the next 3 to 5 years.
I'm so glad you brought that to us, Ray. Thank you. Great analysis.
Hey, thanks a lot.
Appreciate it.
Happy morning.
Happy morning. Thank you.
Happy Monday.
Ray Wang, you too. Have a beautiful Monday. Principal analyst and founder, Constellation Research. Thanks, Ray.